The IRS recently announced that it assessed $162 million in penalties over false tax credit claims tied to social media. There are a growing number of fraudulent tax schemes circulating on social media by self-proclaimed tax experts that promote the misuse of credits. There are also a number of social media influencers who are also providing false information, not necessarily out of malicious intent, but out of ignorance. But the results of the misinformation, regardless of where it comes from, leads thousands of taxpayers to file inaccurate or frivolous returns, often resulting in the denial of refunds and steep penalties. As a tax professional, you want your clients to turn to you first when they hear tax-related information. CCH AnswerConnect is an easy-to-use tool in your pocket that allows you to confidently answer even the most complex questions. Our team of experts provides easy-to-understand analysis and explanations of the toughest tax topics so that you can, in turn, provide this information to your clients. One of the topics being discussed on social media now is that the One Big Beautiful Bill allows taxpayers to deduct interest on personal car loans. People are not including additional information such as any eligibility requirements, and instead, people are simply being encouraged to go and purchase a car so that you can deduct the interest. So let's ask AnswerConnect about this so that number one, we can make sure that any information that our taxpayers need is going to be accurate. So we're going to go to the AI assistant and we're just going to type in our question and we're going to click search. The CCH AnswerConnect AI assistant will search through all the information that we have on the One Big Beautiful Bill Act and provide the answer. And as we can see here, yes, for tax years beginning after 2024 and before 2029, you may deduct up to $10,000 per year in interest paid or accrued on a loan used to purchase a qualifying passenger vehicle for personal use. The deduction, as you can see, only applies to new vehicles that have final assembly in the United States. So that means if someone were to go and purchase a previously enjoyed vehicle, it would not qualify. There are also modified adjusted gross income phase outs. This amount is set at $1,000 for individuals filers, single filers, and $200,000 for joint filers, and it is available whether or not the taxpayer itemizes their deductions. But maybe you have a client in front of you and you don't want to read through all of this information. Maybe you want to see this information in a bulleted list so that you can quickly go through the topics, or maybe you want to create an email to send to your client. We can ask the CCH AnswerConnect AI assistant to generate a bulleted list of these requirements. Once we put this in the search, it's going to comb through the information and it will generate the bulleted list of requirements for us. And as you can see, it's only a matter of seconds before we're able to see the answer. And as it is with all things related to tax deductions, there would be documentation that will be required by the taxpayer to provide to be able to take this deduction. So what we can do now is we can ask what documentation is required. And what the AnswerConnect AI assistant will do is provide you with the list of documentation that you can in turn provide to your taxpayer and say, this is what you will need to produce and provide to the IRS in order to qualify for this deduction and to take the deduction. And as you can see here, if there's anything else that the IRS may require, they will release that in a future regulation. Thank you again for joining us today on a deep dive through CCH AnswerConnect with the AI assistant.